In this video, I'm going to be going over exactly how much dividend income I made in the month of July from a $194,000 account. And to break this down, we're going to be jumping into my do-it-yourself investor toolkit, looking at my investment dashboard, my dividend dashboard, my dividend calendar, my daily dividend calendar. And like always, we're also going to project out what my portfolio will look like in the future so we can see exactly how long it will take me to achieve my long-term goal of one day living completely off my dividend income. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Seeking Alpha for sponsoring this video, but more on that later. Now let's go ahead and jump in. Now the first thing I want to show you, if we go ahead and zoom in, is my portfolio value is now at an all-time high, sitting at $194,000. And yes, I did add some capital to my portfolio in the month of July, but most of this actually comes from gains in my portfolio. Now, you're probably wondering, why is this? If we look at the S&P 500 over the last month, it looks like it's down around 1%. But one of the largest holdings in my personal portfolio is actually SCHD. And if we look at them over the past month, it has soared. It's hit new all-time highs. It's up around 4.2%. So this has really pushed my portfolio value up quite a bit in the past month alone. Again, you can see we're now sitting at $194,000, and we can also see over $45,000 of this is completely from gains. Now, there's a big misconception that if you're a dividend investor, you're not going to see much share price appreciation. But if you know what you're doing, you're going to look for quality companies that are constantly growing their free cash flow. And as a byproduct, they're going to not only grow their dividend payments, but you're also going to see quite a bit of share price appreciation as well. And that is exactly what has happened with my personal portfolio. Now, if we keep zooming, we'll scroll down here and we can see my allocation. I'm currently 94.2% in stocks, and my cash position is only sitting at about 5.8%. Now, my cash position went down a little bit this month because I did deploy some new capital, a little bit more than I typically do. So again, cash position is a little bit down. Now, one of the things you'll notice is my total holdings is now sitting at 28. If you've been keeping up with my monthly portfolio updates, you know last month it was actually sitting at 30. So I got rid of 2 positions this past month. Now, what positions were these? And the 2 positions that I sold out of were KHC, the Kraft Heinz company, but I also sold out of J.M. Smucker company. Now, you're probably wondering why I did this. Well, to be honest with you, these are positions I added to my portfolio years ago before I really understood what my long-term goal was, when I was just starting investing, and I had very little capital in these positions. Each of them were around $200 or $300, and I pretty much broke even on these positions. Now, I don't necessarily think there's anything wrong with these 2 companies, but over the past decade, I've developed a much deeper understanding of how to achieve my long-term goal of one day living off dividend income. And there's a couple of different keys. Yes, I want to look for high-quality companies that are growing free cash flow every single year, but I also want to make sure I have a deep understanding of each of the positions in my personal portfolio. So if I have total holdings of 30, it is manageable, but it's difficult to keep up with every single position in my portfolio and have a deep understanding of each of those positions. So really, I want to get rid of any positions in my portfolio that aren't very high conviction. One of my favorite investors of all time is Peter Lynch, and one of his famous quotes is, "Know what you own and know why you own it." Again, each of these positions aren't necessarily bad positions, but they're just not companies that I want to hold in my long-term portfolio. Now, on the flip side of that, I actually added capital to quite a few positions in my portfolio this month. None of them were new positions. These are all positions that I already had in my portfolio. And the first was I continued to dollar cost average into SCHD. I didn't put a lot of capital into them this month, but I did continue to dollar cost average. Now, the next one is a company I've talked about recently on the channel, and it's a company that's right at their 52-week low, and that is Louis Vuitton, stock ticker LVMHF. They're trading at $690.75 per share. Now, when you look at this down here, you can see they have a starting dividend yield sitting at 1.69%, and you're probably thinking to yourself, well, how is that going to help you achieve your long-term goal of living off dividends? Well, here's what you have to understand. If we come over to my stock screener, plug in LVMHF and hit enter, what we can see are some signs that indicate this is a high-quality company. Again, we have to remember, dividends are paid out of free cash flow, so dividend growth is a byproduct of free cash flow growth. Capital appreciation is a byproduct of free cash flow growth. And if we look at the free cash flow per share of this company over the past decade, it's gone from around $5.97 per share all the way up to $21.19 per share. So their ability to pay out dividends has dramatically increased over the past decade. And in fact, if we jump over to my dividend breakdown tab, come up here, plug in LVMHF. And again, we can see double-digit free cash flow growth over the past 5 and 10 years from this company. And as a byproduct, we see very high levels of dividend growth. Look at the free cash flow versus dividends paid out. Again, this blue bar chart is the free cash flow the company is generating, and the red bar chart are the amount of dividends paid out. What we can see is the amount they're paying out in dividends has grown exponentially as well over the past decade, going from around 1.5 billion now all the way up to over 7.1 billion in a single year. 2023 paid out over 7.1 billion in dividends. This is exactly what I want from most of the companies that I buy. Now, if we keep moving forward, the other position I added capital to was Visa stock. They were down quite a bit earlier this month. You can see investors didn't really like their recent earnings report, and they dropped all the way down to around $253 per share, and I started adding some shares. And now over the past month, they're actually up slightly, around 0.23%, and have since recovered to around $264 a share. The next company I added shares of, just a few, was Vici Properties. This is one of my favorite real estate investment trusts, and they actually have a higher starting dividend yield, sitting at about 5.31%. Then the other company I added was Domino's Pizza. They had a pretty big sell-off earlier this month. You can see down around 16.39%. And this company doesn't get talked about very often, but it's been a sneaky good dividend stock over the past decade. Look at the past 10 years, up around 486%. And again, if we jump over to my dividend breakdown sheet and plug in DPZ, and we can see, yes, low starting dividend yield sitting at 1.43%, but the dividend growth has been pretty unbelievable from this pizza joint. 10-year dividend CAGR of around 20%. So when we look at where they were in 2013, paying out 80 cents per share, compared to where they are right now, $6.04. That is pretty unbelievable dividend growth from this pizza company. And then the last company that I added shares of to my portfolio, I bought one single share of Microsoft. Now, this was the first time I've added Microsoft shares to my portfolio in probably over 2 years. They had a pretty big sell-off earlier this month. You can see currently down around 7.28%. And I have to admit, this company might still be trading at a slight premium, but this is probably one of the best companies in the entire world. And one of the things I like about Microsoft is it's very easy for me to be comfortable with them in my portfolio. The free cash flow growth moving forward over the next 10 and 20 years is very, very predictable. So I can feel very comfortable that they're going to be able to continue to grow those dividend payments over time. And of course, not to mention, I'm going to see tons of share price appreciation long term as well. In fact, if we jump over to my growth chart here on my Do-It-Yourself Investor Toolkit, we can see my Microsoft position as of right now, currently up around 57%. And keep in mind, that's already with the big pullback we've seen over the past month. I've also seen some major gains from companies like AVGO, up around 190%. This was closer to around 250% just a few months ago, but we have seen a little bit of a drawback. But then we have JP Morgan, 97%, Caterpillar, 87.54%. We have Jefferies Financials, a company that's not very popular, but I talked about it a couple years ago on the channel, and I talked about when I added it to my portfolio, and I'm now up 85.5%. This has been a huge winner. We also have Apple, around 57.74%, and quite a few other positions that are up around 25% or even more. For example, look at Lowe's, 35%, Texas Instruments, around 30%. Look over here, Waste Management, 32%. Overall, my portfolio growth has been very good. Again, a lot of people don't seem to understand. If you're a dividend growth investor, you should be seeing a lot of share price appreciation as well, just like I've seen in my portfolio. Now, if we scroll up to my allocation chart, you can see SCHD, by far my largest position. This is a diversified dividend ETF, more specifically dividend growth ETF. It has a great combination of starting dividend yield and massive dividend growth, especially over the past decade. But behind this, my two largest positions are companies a lot of people wouldn't even consider dividend stocks. We have companies like Microsoft making up around 7.2% of my portfolio, and Visa is now the third largest position at 5.6%. I have over $10,000 allocated to both of those positions. And I would consider Visa and Microsoft some of the highest quality stocks out there and some of the highest quality dividend growth stocks. They're projected to grow at very high rates over the next decade, and they're also leaders in their market. So the dividend growth is pretty predictable. But other than that, we can see everything else is fairly well diversified. Vici is a decent position. This is one of my higher yielding positions, makes up around 4.4% of my portfolio. Then of course we have Lowe's at around 3%, and Texas Instruments is actually a decent size at about 3.2% as well. Now, if we keep scrolling down, we can actually see my allocation by industry. Right now, I don't have SCHD broken down into industry. I just have it listed as an ETF, making up around 47%. But we also have technology at around 16%, financial services 10.7%, and other than that, fairly well diversified. Real estate's around 7.4%, consumer cyclical 6.2%, we have healthcare at about 4%, and then consumer defensive around 4.5%. But now I want to go ahead and jump over and talk about what everyone wants to see, and that's how much dividend income did I make in the month of July from my portfolio. So let's go ahead and jump over to it. And if we go ahead and zoom in, we can get a good look at this. Now for reference, last month was my highest month of dividend income ever by a large amount. It was a milestone month, hitting over $1,000 in dividend income for the first time ever. June, I had $1,108.17 in dividend income. It was a massive month. And what we can see has kind of been the trend for my portfolio based off when my companies pay out dividends. I'll have a high month followed by a couple of lower months, high month, couple lower months, high month, couple of lower months. So to be expected, this month was a little bit lower than last month, but here's what's important. We can see these highs are getting higher and higher, but the lows are also getting higher and higher. And in the month of July, I made $256.54 in dividend income. Now here's what else we have to understand. If we scroll up, we can now see my expected yearly dividend income sitting at $5,853.51. So my average monthly dividend payments, the amount I make on average every single month, is sitting at $487.79. We're getting really close to another milestone of $500 every single month in dividend income. Here's what else you have to understand about this. If I don't add any new capital to my portfolio, if all I do is reinvest dividends, that's still $500 going right back into my portfolio every single month. But keep in mind also, the companies I own increase the amount they pay out in dividends over time. So for example, if my portfolio has a 10% average dividend growth rate, that would be $50 extra every single month. This is why the compounding effect is so powerful. Now, like I mentioned earlier, portfolio hit a new all-time high this month. We jumped up from around 180,000 all the way up to 197,000 right at the end of the month, but as I'm recording this video, it's down a little bit, around 194,000. Again, a lot of this comes from the big jump up in share price from SCHD. Now, if we scroll down a little bit more, one of my favorite charts to look at over time is my projected annual dividend income. Now, why is this? Well, we can see my dividend payments over time can fluctuate a little bit. Share price of my portfolio can fluctuate up and down, but my projected annual dividend income only goes up. For the reasons I just mentioned, I reinvest dividends and the companies I own also increase the amount they pay out in dividends over time. Now we can see there was a slight dip right here, but that's actually because I sold out of some higher yielding positions that I no longer felt comfortable with holding. But other than that, every single month, my projected annual dividend income is climbing higher and higher. And in fact, we can see at the start of this year, we were sitting at $4,956 projected annual dividend income. And as of the end of July, we're sitting at $5,860. Now, like I mentioned earlier, the end goal for my portfolio is to one day be able to live off dividend income. So that's for my dividend income to cover all of my expenses on a monthly basis. So let's put this into perspective. Let's say right now my monthly cost of living, just as an example, maybe it's around $4,000. That means that my annual dividend income right now could cover an entire month of my cost of living. Or for example, maybe my cost of living is lower. Maybe it's $2,500 a month. That'd mean my annual dividend income can now cover 2 months out of the entire year. Now, it may seem like I'm still a long way away from being able to achieve my long-term goal, but due to the snowball effect, the compounding effect, I'm actually a lot closer than you might think, and I'll show you that here in just a little bit. Now, if we look at my other allocation chart, you're probably thinking, what is dividend income by industry and why is this relevant? We already looked at an industry chart over on my portfolio dashboard. Well, this is telling us how much dividend income is coming from each individual industry. You may think as a dividend investor you're properly diversified, but if all your dividend income is coming from one single place, that's pretty risky. For example, like I mentioned earlier, if we jump over to my investment dashboard and look at real estate, it makes up around 7% of my entire portfolio. But if we look at the dividend dashboard, we can see real estate accounts for around 13.3% of all my dividend income. So if you're too exposed to real estate and all your dividend income is coming from real estate, if something were to happen to the real estate market, that could be pretty detrimental to your portfolio. So that's another way of thinking about it. But overall, again, ETFs make up the vast majority of my dividend income, so I have a lot of built-in diversification there. Real estate is the next largest at 13.3%. We also have consumer defensive at 8.1%, technology around 7.3%, financial services around 6%, and then a couple of other industries around 4 or 3%. Now, if we come down here, we can see my dividend yield on cost. And I've talked about this on the channel before, but dividend yield on cost is actually pretty important to track because it gives you more of an idea of how much the compounding effect is taking place with the holdings in your portfolio. And one of the best examples of this is Broadcom in my portfolio. We can see my dividend yield on cost is sitting at about 4.04%. But if we jump over to Seeking Alpha, we can see the starting dividend yield for this company is actually sitting at about 1.31%. It's a pretty radical difference from my yield on cost of 4%. Now, why is this? Well, it has to do with a couple of different things. First off, if we look at the past year, we can see they're up 65%. Which will push down the starting dividend yield. So step one, I bought in at a great price. I bought in at a good valuation. But also this company has rapidly increased the amount they pay out in dividends over the past decade and since I've been holding the company. Look at this. In 2014, they're paying out about 3 cents per share. 2024, 53 cents per share. So that's 2 steps you can take to get a higher yield on cost from quality companies in your portfolio. Buy in at good valuations, but also buy companies that are constantly increasing the amount they pay out in dividends. Again, this led me to a very high yield on cost with AVGO of around 4%. Now finally, if I come over here and zoom out just a little bit, we can see how much each individual position is paying me in dividends in my portfolio. And for example, obviously SCHD is by far the largest, paying me around $3,115 as of right now. We can see Vici is also a pretty big dividend payer at about $456, Realty Income $322, Altria around $350. We also have Texas Instruments around $170 a year, but for the most part it is fairly well diversified with where the dividend income is coming from, just like we saw on my dividend income by industry sheet. Next, I want to jump into our dividend calendar, but first I want to say thank you to our sponsor, Seeking Alpha. Like you've already seen in this video, Seeking Alpha is a tool that I use all the time, and it's one of my favorite investment research platforms. We can see a lot of key metrics right here on the home page, and we can see how Broadcom has been trading over different periods of time. They also have access to all the financial statements, the income statement, balance sheet, and cash flows with data dating back many years. But also, if you're a dividend investor, they give pretty good insights into the key dividend metrics. For example, if we scroll down, we can see their dividend summary right here, but also dig deeper into dividend yield metrics, dividend growth metrics. For example, we can see 5-year dividend CAGR with Broadcom of around 16%. We can look at key dividend safety metrics, dividend history metrics, but they also have dividend estimates as well. So they're estimating how much Broadcom will pay in dividends in the future. If we click on valuation, we can see some key valuation metrics. Profitability, the same thing. For example, here's our gross profit margin for the trailing 12 months, 74.24%, so that looks pretty good for the company. And then we have charting, and this is one of my favorite things about Seeking Alpha. We can see how the company's done versus the S&P 500 or any other company over different periods of time. So Seeking Alpha is a tool I've been using for years now. It's one of my favorite investment research platforms. If you're ever interested in using it, then I suggest you check it out at the link in the description, and you'll also get a discount code there as well. Now, if we keep moving forward, we're going to look at my dividend calendar, and my dividend calendar is one of my absolute favorite ways to track my dividend income over time. And I know it looks a little bit complicated, but it's actually pretty simple. If we go ahead and zoom in, you can see right here, it's telling us how much we made in dividend income on each of these months, dating back to January of 2022, but it's also telling me how much dividend income I've made from each individual positions. Both of these things are very cool to see, but there's something more important here. This allows us to easily see dividend growth over time, and the example I like to show the most is Realty Income. And the reason this is a good example is because they pay out dividends every single month. But because they increase the amount they pay out in dividends, and I also reinvest my dividends, we can see on a monthly basis, these dividend payments are slowly but surely growing every single month. So I started at $5.83, but if we move forward to September of 22, it's grown to a little over $6.03. Keep moving forward, February of 23, it's about $8. Keep moving forward, August of 23, it's at $21. If we zoom all the way to my most recent month, Realty Income paid me $27.23. So we can see the dividend growth over time. Now, yes, I have added a little bit of capital since then as well, but the concept remains the same. So let's go ahead and break down how much I made in dividend income from each of these positions in the month of July. Starting off, Coca-Cola, I made $21.40. Altria Group, close to around $90, just a little under it. Realty Income, $27.23. Vici Properties, that was a big payer, $96.43. JP Morgan, around $12. JEPI, $8.46. We have Cisco, a very small position, $1.68. And we can see that all totaled up to around $256.54. Again, this was radically lower than the previous month, which was around $1,100. But on average, I'm close to around $500 every single month in dividend income. Now, if we scroll out, we can move on to the daily dividend calendar. This is another cool way to track dividend income over time, and with a spreadsheet, again, it's completely automated, but we can see exactly what days we were paid dividends and how much total we've been paid for the entire year. Now, we can see in 2024 so far, I've now been paid over $3,033 in dividend income, and compare this to where I was in 22, I've already way doubled where I was in 2022, and we're only 7 months through the year in 2024, and after the next month or two, it looks like I'm going to pass where I was in 2023, so it's fun to track that progress over time. Now, we can see in 2024, my highest day ever was actually last month when SCHD paid their largest dividend ever. My highest day was $890.85, and if we go ahead and zoom in, we can see what days I got paid. It looks like July 1st, $21.40. July 3rd, a very good day at $105. The 10th, around $89. The 15th, $27.23. And then on the 24th, $1.68, and the 31st, $12.05. So it's really encouraging to see my progress tracked over time. Helps me to realize exactly how far I've come since I started this journey. But one of the things I also like to do is project how much further do I have to go. And if you're using my do-it-yourself investor toolkit that you're using here, it's actually not too hard to project what your portfolio can look like in the future. If we jump over to the portfolio projection tab again, we're going to project this out 30 years into the future, and it's going to help me understand how long it will take for me to one day be able to live off dividend income. So we need to go ahead and plug in some assumptions right here. You can see I plugged in my starting portfolio size around 194,000. I plugged in a price growth rate of around 7% and dividend growth rate of 7%, pretty much at the historical averages. The past decade, it's actually been quite a bit higher than both of these. And the starting dividend yield we're assuming is sitting at about 3.5%. Now I'm being very aggressive with my monthly contributions. The goal is around $2,500 every single month. Now, when I started out, I was only contributing around $50 every single month. So I've come a very long way since then. So projecting out my portfolio is step one to find out how long it will take to live off dividends. But something else we have to take into consideration is how much is our cost of living. And something a lot of people forget is we have to understand inflation compounds over time just like any investment. And it's a little scary to think about, honestly. So for example, we can see, let's assume my cost of living right now is $4,000 a month. If inflation on average is around 2% over the next 30 years, which I know a lot of people think it's going to be quite a bit higher than that, but this is the historic average. Let's just play with it for a second. We can see again right now, if my monthly cost of living is $4,000, by around the year 2040, it'll be closer to $5,455, and at the end of our 30-year period, it's going to be around $7,245. It's a little scary to think about, honestly. But here's the key takeaway we should get from this. You have to find ways to make your money work for you. And the reason is inflation is constantly working against you. If you're not currently investing your money, looking at this cost of living chart should be a wake-up call. So the key is, if we want to live off dividend income, we have to find a way to get our average monthly dividend payments above this black line, but also stay above the black line. Some people will buy high-yielding dividend investments and maybe start around right here, but you can see if those dividend payments don't grow, eventually your cost of living would surpass your average monthly dividend payment. So this is why I buy dividend growth stocks. If we jump over to my live off dividends analysis, we can see starting out looks like I'm a little ways away from being able to live off dividend income, but the compounding effect really starts to take place, and right here is the point at which I would be able to live off dividend income forever. And then the compounding effect really takes off after that, which is pretty exciting. So how far away am I from this point? Well, if we come over here and go ahead and zoom in, we can find out exactly how far I am from this point. If we go ahead and start scrolling down, we can see after about 5 years, here's where I'm projected to be. Average monthly dividend sitting at about $1,514, while my monthly cost of living is sitting at about $4,400. So I definitely still can't live off dividends at that point. If we keep scrolling down, let's see where I'll be in around 10 years. Right here, we can see after 10 years, my average monthly dividends will be sitting at about $3,102, which is quite a bit of money. That's over $36,000 a year, but my monthly cost of living will be sitting at about $4,875. And then if we keep scrolling down just a little bit further, we can see right here, here's where the change happens. In year 14, it looks like around halfway through year 14, my monthly dividends will be sitting at $5,318, while my monthly cost of living is sitting at about $5,312. So that means this is the point at which I would be able to live off dividends forever. Now, I know what you're thinking. Well, if I start living off dividends, I can no longer reinvest those dividends back into my portfolio. And you're 100% correct, but keep in mind, if the dividend growth rate of your portfolio is above the rate of inflation, you can still live off dividends forever, meaning your dividend payments will be growing at a higher rate than inflation. That is a key concept that a lot of people don't seem to understand. Now, something else that is really exciting about this is if we look at my account value, it's sitting at about 1.8 million at this time. Now, like you saw just a moment ago, the growth from this portfolio is exponential and the dividend payments are exponential. So for example, it looks like it takes us around 13 years for our monthly dividends to get to around $5,000 on average every single month. So 13 years for the first $5,000, but look how quickly we get to $10,000. If we keep scrolling down, we can see right here, it took us 14 years to get that first $5,000, but to get that next $5,000, it only took 19 years, so it took around 1/3 of the time to go from the first 5,000 to the next 5,000. That's the compounding effect taking place. And we can also see at this point, my account value could be sitting at $3.4 million. Now, if we want to get a simple breakdown of everything, let's go ahead and jump back over to my investment dashboard and glance at this future portfolio outlook. We'll come down here and we can see Assuming we're reinvesting dividends in 5 years, our yearly dividend income would be around $18,000, 15 years, around $69,000, and in 30 years, $359,000. Now, watch how radically different this is if I don't reinvest my dividends during this time period. That 30-year dividend payout goes all the way down to $154,000 every single year, pretty much half of what it could be. So again, reinvesting dividends plays a major role. Now, $154,000 is still a lot, but I prefer to reinvest my dividends and maximize my dividend income. So overall, I'm pretty happy with where I'm at with my portfolio right now, and there's probably some minor adjustments that I'll make along the way. Overall, I'm very confident in my strategy. My portfolio is now at an all-time high of around $194,000, and my average monthly dividend income is very close to a major milestone of $500 a month. Now, like always, if you'd like to be able to use any of the spreadsheets you saw in this video, then you can head over to tickerdata.com at the link in the description. Tickerdata will allow you to automatically import stock financials straight into your spreadsheet so that you can use my automated spreadsheets or create them for yourself. Again, I'd also like to say thank you to Seeking Alpha for sponsoring this video. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.